Hello, everyone, and welcome to our first webinar of 2026. I'm Kathy. I'm the webinar organizer, and I'm so glad that you could all join us. For those of you who may be new to Rosenfield Co., we're a CPA firm with a strong focus on the automotive industry. Beyond accounting, we serve as advisors to dealers, helping them navigate operational challenges, manage risk, and build stronger and more profitable dealerships. Every month, we host these webinars. We bring together industry experts for practical, real-world conversations designed to deliver insights that you can apply immediately in your dealership. So today's session, we will take a deep dive into how DMS reporting gaps and overlooked tools can quietly create financial and compliance exposure. We're excited to be joined by experts Corey Kohler of Reynolds and Reynolds and our own Adam Rosenfield, as well as our moderator, Alicia Webb. We have a lot of valuable information to cover today, so I'm already thinking we may go slightly over our scheduled time. We'd love for you to stay for the full discussion, but if you need to step away, no problem. We're going to be sharing the recording along with the slide deck afterward. And just a quick reminder, the Q&A chat feature will be open for your questions during the session. And with that, I'm going to hand it over to our moderator, Alicia Webb.
Thanks, Kathy. So just glancing at this slide deck, our speakers have so much knowledge in this area, and there's so much information packed into this. I'm going to learn things that the DMS can do that I never even imagined. And I think they're going to impart some really valuable knowledge. So with no further ado, I'm going to hand it over to Corey. Bye, y'all.
Awesome. Well, thanks so much for having me. This has been a fun experience. I enjoyed sharing a little bit as we kind of prepared for this webinar. I work with our product management group at Reynolds and Reynolds. So I've been with the company a little over 20 years. I started in retail. I started at a Toyota store. So I've been around a little while for automotive, but it's really exciting to be able to share and kind of come through and talk through some of the pieces on it. As we go through, the real focus is going to be around kind of three areas that we're focused on to help for a successful software implementation. That encompasses preparation, like what the things that we do beforehand, some of the implementation pieces that we incorporate, and then monitoring, right? So what we can do, you can't expect what you don't inspect, and so we've got some pretty cool things that are around that. Through these phases, my goal is to demonstrate how our approach ensures that your team is set up for success with the correct role-based access, reporting, support to ensure that you're running at peak operational performance and maximizing your profitability. So from within the kind of first stage of things, even before we've earned your business, our team is really good at kind of going in and getting to the crux of all the pieces that happen within the day-to-day in your operation, and that includes all the moving pieces, right? Whether that's something that is a DMS component, whether it's a third party that you have handling those pieces, it really helps us to understand deeply what the needs of the business are and how we can contribute to being a solid partner provider. So we go through and kind of document out all the steps. We look for, are there pieces that we could help eliminate or help automate based on either settings or specs or even incorporating AI into some of those areas. We look at the hardware and networking configurations, what the assessments are for either hosted on site or Era Cloud. The majority of our dealerships are hosted in our cloud, so we're able to provide some of those areas as well. Any roles and accesses, so using role-based access so that it's kind of that least access model so that we aren't giving too many people too many access to things. Any reportings reporting that's needed. So whether that's a standard report that's available in the system or ones that are available through our dynamic reporting platform. And again, processes or components that we can eliminate or streamline. List goes on and on. Like there's no shortage of things, but we do that even kind of beforehand, so that we're setting you up for success once we hit the ground. And a big piece of that is making sure that everything's kind of mapped, configured, and set up appropriately. In that preparation stage, we work really closely with the parts and service teams, the accounting teams. You got almost a small army that's in most cases, helping make sure that sales tax is set up properly and shop supplies are configured, and then if you can charge them in your state. And all of those pieces are mapped back to the appropriate accounts. And I know Adam will talk a little bit in some of those areas, but that everything is kind of lined up to set you up for success, and making sure that those charges end up in the correct place so that you don't have profit leaks where stuff's just getting lost, or you're not accruing it to the appropriate accounting or to the right entity that needs to be able to be the recipient. Specifically to parts, we work really closely with parts management to make sure that we have the pricing matrix dialed in, which is imperative because it impacts every single part that gets on every single repair order, service, as well as parts tickets. And making sure that those setups are accurate helps make sure every bit of profit makes it to the ticket or invoice and ultimately to the bank account. And so we work really closely with the parts matrices and all the pieces that go along with it. And specific to parts, we also work to make sure that we look for every opportunity to generate revenue. So one of the things that we have it's a really cool feature is the parts retail markup option. And that allows us to be able to match kind of what we have in some of the areas like you see in a lot of retailers where the parts always end in, the item always ends in 99 cents or 97 cents. We can do it where it basically rounds up so that you get kind of that extra allocation. Or you can actually add an incremental amount to every single part count that goes through. So when you start looking at higher volume part numbers that are moving through the store, in some cases that can add up to very, very big money, right? Even though it's just a very small incremental component. One of the things, because of the scale of vehicles that are moving through service and then through parts invoices, but predominantly through service, is that very, very small changes can result in very, very large production. So working with the teams to make sure that that's all set up appropriately, so that we can make as big of an impact as possible. The next piece comes to implementation, right? And whether it is the core DMS, whether it's the part software, service software, or some of our fixed ops specific solutions like advanced service or service price guides, we work to make sure everything is set up properly for accurate reporting from the beginning. And because we don't exist outside of the space we work in, advanced service being a perfect example of that, it incorporates a guided approach. So there's not an option to skip checking the boxes, or that I can't not do the inspection or the multi-point. It's part of that inherent e-workflow that happens within the system. Because if you're not getting that accurate information, your reporting is absolutely going to be inaccurate. And if you're not reporting properly, it's going to make it really hard to try and make the right operational decisions. That's that age-old adage of garbage in, garbage out, right? It is incredibly true. And I know we even talked about that, as we were preparing for this, is that a really key element is that you have very accurate, very reliable data, and being able to help make sure that that gets managed earlier upstream makes it better when you get the reporting further downstream. So from an implementation process, one of the philosophies that we have at Reynolds is, using that single system approach to help make sure that all of the pieces encompass part of a cohesive suite. And so whether it's parts, service, whatever those areas are, again, our small army of trainers that go in and spend time helping make sure that users are making that transition and getting off on the right foot. In the fixed ops realm, is one of our value-added solutions we encourage every store to implement is service price guides. And I actually started with the team that does consulting on SPG when I first came over from the dealership. That tool allows us to be able to tie parts and labor information directly in, like, very quickly. And so we see correlations that when we're using the tools that are in place, we see really, really good results on the other side of it, right? So looking at this chart, this is, for comparison of stores that don't have service price guides versus those that use it some, which is a couple of times a repair order, up to those that use 5 or more times a repair order, right? The number of times usually increases depending on the number of jobs that there are and the number of additional service options that we have, or even just going in and using the tool to look it up. But when we see that, super category, like we're seeing 80% higher total gross versus non-users. So it's a pretty profound impact that can help not only improve efficiency, it helps reduce or remove liability for not having a consistent pricing that you're presenting to your customers. It also helps get the answers faster and helps maintain profitability because everybody is looking out of that same playbook, right? We don't have somebody making different deals or different pricing on different sides of things. It also helps to make sure that when we're presenting factory recommended services, we don't have to guess what's incorporated in it. So we have some pretty cool capabilities of being able to show exactly what the vehicle needs, so that the customers are confident in what we're presenting to them. They can go back and compare that versus what's in their owner's manual. So the third stage of success is really monitoring the processes and the tools that we've put into place with new software, and also monitoring the people that are using those tools. The number one cause of mixed revenue and fixed ops is simply due to poor utilization of the things that are available, right? What can we do to help bolster some of those areas for things that maybe aren't being monitored or aren't being tracked? And so we wanted to take a couple of, just a couple of the standard reports that are available within Era Ignite. There's a ton of them that are there, and I could spend hours probably going through a bunch of the different reports. But we tried to pick out a few of them that were really actionable or particularly informational for the discussion today. One of those is the effective labor rate report. We talk about effective labor rate or effective collection rate, and that really helps bolster and reflect what the profitability of each hour that you sell within the stores. It gives you the total number of hours that you sold. It gives you the number of repair orders that you sold, so you can quickly get to your hours per RO. But it also allows you to be able to see for each one of those hours that I sold, what am I collecting? What am I taking in? Because that's really the key of the service profitability, is making sure that we maintain a satisfactory effective labor rate. And the other piece to that is that's another one of those areas where very small incremental changes and just letting people know that you're keeping tabs on is really important, because once they see that you're monitoring that and you're keeping tabs on it, then it's one of those areas that they'll look to make sure that they're keeping that effective rate up. And Adam, I know we talked a little bit, and you'll probably lean on it a little bit, around pay plans too, right? Like some of the most successful pay plans that I've seen incorporate a number of things in them. Like usually it has kind of a matrix that goes across, but effective labor rate is usually one of them, because that's a key measurable area for productivity and for profitability.
Yeah, no, I 100% agree. And most of the time, like bad practices are generated because that is how their pay plans are structured. They're only going to focus on what increases their pay, right? How's their pay plan structured, and what can I do to increase my pay? That's all that they're going to care about.
Absolutely, and that leads in very well to the next one as well, which is the upsell analysis report, right? This is at the heart of our advanced service product, and this really takes a look at the activities that are happening within your dealership to be able to metric users, right? Whether that's the number of recommendations that are coming out for each technician, or the ability of your advisors to close on the opportunities that are there, all the way down to being able to understand what are we capturing, but what's the opportunity, right? And without, again, good, clean, accurate data that kind of comes into it, there are a lot of stores that are like, hey, this is horrible. I have $500,000 that we didn't sell this month. And on the other side of it, it's like, we got $500,000 of conquest to be able to go out and follow up on and try to get that back in. And so this report allows us to be able to kind of key in and see, are we presenting things, right? Or are we closing the services that are offered? Are we recommending things? What's our closing percentage? And what are the dollars that are out there that we have to go after? And because all of this becomes part of that embedded workflow, it becomes essential to anybody who's doing their daily tasks that in order to be able to finish off that repair order, I have multi-point inspection. And the multi-point inspection helps generate the services that we go present to the customer. And if there's not a, hey, I'm too busy, or I think somebody may not want to do that, like it now it's become that part of that service record, which also helps from a compliance standpoint and make sure that we didn't say, hey, you need tires, right? Well, if I had tires and that was a safety thing and I go down the road and it blows out, like that's going to be a problem. But if I had it documented and I said, hey, we told you need tires, like that's one of those areas that, now not only can we follow up on that customer if we don't sell it today, but it also makes sure that we've checked the box to say, we've checked everything out.
Yeah, I really did like this chart that you put in here when we were going over it, because it has a lot of good data on it. So when you first look at it, you can clearly see one of the biggest issues when you're talking about clean versus dirty data. a lot of the people in here, I mean, either they're just not putting in that they try to upsell anything like the first row, or, they maybe have put in two of them, or they, hey, maybe I'm that like fifth row, sixth row down where there's the 200%, they probably only put in the two that they closed. What about all the ones that they didn't close? So you have no idea. And then also on the flip side, the third to last row, where it looks like they only had a closing percentage of 47% roughly, but they had by far the highest amount of sales that they actually closed on. So you want to have get all of your advisors together, have a meeting. Hey, what is this person doing? Even though their closing percent is low, they're clearly looking for the best bang for your buck. And then you have another one who's up there who's closing at almost 77%, but they have barely any sales. So maybe it's just wipers or something like that they're
Very
doing.
little profitable work, yeah.
But you want to then have a meeting, get them together, and say, hey, what best practices can we share to each other, so that way everyone's kind of getting more involved, and then going back to the play plans, to get rid of some of this bad data and force it. Say, hey, maybe you don't care about closing percentage. You just care that, hey, if you have 0 added, or you're at 100% and it's only 2 of 2 or 5 of 5 or something like that, you're going to get dinged, because I know there's no way that's all you did. You have someone out there that's doing 21 or attempting 21. Now they're not closing on a lot, but hey, I'd rather have that person who only closed on 38% than this one person who closed on, just the $97.
They're moving
twice.
the needle, yeah. No,
Yeah.
100%. They're moving the needle, and that's the goal with this. It's really almost. I mean, you think about. I know we just had the Super Bowl and football season's over, but it really is. It's that, how can you go and coach somebody, right? And this could be anything from are there certain things that we're not selling? Because I can run this report in a very high level where I'm looking across all my advisors or all my technicians, all the way down to like, am I seeing patterns of people recommending the same things repetitiously, or where we're not closing on certain things, right? That can help me coach my team, so I can go out and say, hey, here's how you explain the value of an alignment to a customer who maybe needs to have one done, or here's the benefit of using our factory trained technicians and our parts that have better warranty coverage on them than some of the ones that are maybe in the aftermarket or some other channels. So it's really it's reviewing that game footage, right, and saying, hey, here's where we could have done better, but also understanding, that this is the output of all of the effort that happens within that system. And I think that's a really, really key thing, is being able to incorporate not only the reporting pieces of it, but also the control and the capabilities within the system, right? Is that, where fixed ops, it generates the majority of the net profit that helps keep the dealership open and running. A lot of times it doesn't get as much focus. And coming out of fixed, I had really good fixed operations directors and dealers that I worked for even before coming to Reynolds. But it is such an important piece of the dealership to help keep everything kind of running and flowing, and keep customers coming back. We want them to be happy, have good experiences, and how do we make that more pleasurable? Because it's usually, I will die on the hill of advisors usually have one of the hardest challenges at a store, because you have a customer who made a multi-$1,000 purchase. It's the second most expensive thing that most people purchase. That now they either have a need for of servicing, or I have something that's broken or wrong, or that that's gone awry, and I get to go back, and now I have to try and navigate through how do I articulate what the customer said was wrong with the car to the technician, so they know how to go figure out what needs to be fixed, or even better, give me an estimate to go back to the customer to tell them that we're going to need to spend more money. So a lot of times that's a really, really hard spot to be in. And so the more that we can incorporate tools that help make that process, I'll say suck less, right? Like where it makes it easy to get that information, communicate with the customer, help make sure that there's transparency to the consumer about what needs to happen on their vehicle. But then on the other side of it, making sure that, we've got good solid controls in place. So like, example we were looking at kind of leading up to this was, a store that they weren't monitoring all the things, right? And Adam, I know some of them you'll talk about. But things where, like this example, a store had an employee that would take the cash from cash customers and then void or keep the R open, or like all these kind of little red flags, right? And so there's some of those areas where we can even utilize reports that exist within the system to say, okay, are there things that are happening? Our acceptance reports are a really good example, like, voids or places where the labor cost, what it costs us to do something was greater than what we collected to do it. Right. And so looking at some of those areas around, is there a little bit of a leak right here? And, where do we follow that down to? Because that allows us to be able to kind of see what those activities are. And often once I go back and I say, hey, you did this on this ticket. Again, you can't expect what you don't inspect. And if you're not watching it, you have that possibility that you're going to have a profit leak there. But once you say, hey, how come this happened? Then it's like a little flag that goes off that says, oh, we're keeping tabs on that, right? And we're going to make sure that that doesn't happen again. Like most people are going to follow through that. And we also have the reporting abilities to take it into account. And then, the other piece is where technology is going to take us, right? With the explosion of AI into every facet of our lives, right? Whether that's, things where, our smartphones are getting smarter or, all the other tools. We have Ray, our virtual assistant that's able to kind of go through and help us navigate to things, right? Like what are my top 5 open repair orders in gross? Or, hey, I need to know how I can, create a report that looks for my 10 oldest tickets, right? Or, hey, here's an insight. There are 10 repair orders that were open overnight that really should have been closed, right? If the system says, well, the technicians finished the work on them and all the parts are billed to them and there's nothing else to do, how come these are still open, right? So like some of those different areas where we can even leverage AI into that area, it really makes a huge difference when it comes time to make sure that we're being as profitable as possible. And then, especially on our side, uh, I do love the Henry Ford quote that's, coming together as a beginning, staying together as progress, and working together as success. Because on our side of it, staying together is achieved through progress of improving our solutions, right? From our product management teams to our support teams to our implementation teams. Being able to come up with new ways to help solve problems at the dealership and being better every day, right? So, as an example, Ray, our new AI assistant, is going to help phenomenally with that. But it's not just technology, right? It's the process and the people that make those things happen. And so working together when it comes into play with our Reynolds performance managers, so our team that's out in the field, that's hand in hand with dealers, our utilization partners, like we have unparalleled resources for dealers to be able to kind of have some experts, some subject matter experts that are in the field, that are in their stores, that are able to help out. And so early is exciting for us to be able to help bring some of those things throughout, to be able to bring them to dealers.
All right. Well, thank you, Corey. So now we are going to get into what we're called when operational gaps are going to hit the financials. So, are you leveraging your DMS enough, right? The DMS, or dealer management system, is the end all be all for dealers, right? That is where all of the data goes. It's where it's all gathered and what we are trying to use to interpret and run our business. And with that, whenever any of us are in a dealership, what we tend to see is that it's one of the most underutilized tools that a dealer actually has at their fingertips. They're always trying to find, the next new shiny toy, and they're trying to implement this new, CRM system or this or that, instead of just focusing on, hey, what do I already have? What am I already paying for that I am not using? And then with that, on top of it is, what is clean versus dirty data? So just a quick overview. Your clean data is what is accurate, complete, consistent, and that it's all formatted uniformly, which in your DMS, it already is like that. As soon as you start getting some of these outside vendors or anything like that, you are running the risks now of duplicate entries. It might not be complete. They might not be getting everything. And that's when it becomes theoretically dirty data. So that's your inaccurate, incomplete, duplicated, and also now there's some inherent risk with any data, right? A lot of the fields, especially in the accounting side of the DMS, are hand typed. You're going to run into that, and you just have to know about it, that there's going to be errors and kind of adjust what you're analyzing. And also, we wanted to kind of briefly talk on some important lingo. I know a lot of it was already maybe discussed or thrown out there, and then these are the ones that we felt sometimes have a lot of misconceptions too. So unapplied labor, I think, is a very big one. I know everyone knows where it goes on the dealer financial statement, but do they actually know what it really is? So this is a little different than and we'll get to that in a second, with what WIP is. But unapplied labor means that you have paid a technician, the dealership has paid the technician, and it has no attachment to any sort of RO or anything else. So you have paid somebody and have gotten no work and no benefit. So if that becomes a very large number, that is a clear sign that something is wrong. There is either, an internal controls issue, an operational gap, you name it. There's too many to probably go over. But that's a big one. I feel like that a lot of people kind of just throw under the throw to the side. And then we have dirty course, which are just the used parts that are removed from the vehicle that are going to be reimbursable. Now every manufacturer has different rules and this and that, but that's another one that can cause a lot of issues. Then parts pad, the one I know people get, they're like, oh, what does that mean? They're looking for like an old school notepad or something like that. Now this is just in the parts module of the DMS. It is your like perpetual inventory system is the best way of thinking about it, but it is different than what we'll call the accounting side or the general ledger or GL side. A lot of times those people get confused, like, well, why isn't it on accounting? Well, those two don't totally speak to each other. Completely different modules of the DMS. And then we have UIOs, or units in operation, and this one will be a big one that people should definitely be monitoring. So what this is saying is it's the number of registered vehicles within your market area. And the trend in the industry right now is that vehicles are only getting older and older and older. I think this morning I looked it up. The average vehicle in the US right now is just shy of 13 years old. So if you don't think that fixed ops is important at all, it is only going to get more important, right? I don't know anyone out there who has a 13-year-old car who does not need to keep bringing it in for some sort of issue that's going on, but that's a lot cheaper than going out and buying a brand new car, or even the used cars. But used cars are coming down in price, and they have been for about the last year and a half, but they're still more expensive than people want to pay, right? Interest rates are still too high. Everyone's complaining, or they don't want to have to take out a 72-year or 72-month loan just to get a used car. So this will be a very important one to monitor, and as well as see if you can get. There's a lot of different ones out, subscriptions you can get, or like the DMV data you can get, and look to see what's the major make, because maybe you have a dealership outside that market area that, okay, there's a ton of Toyotas in this area that are going to need service, and you have a Toyota store maybe a state away or in a different market area. That you can maybe get some of those parts over, or maybe some of the aging parts that you have at your actual new franchise Toyota dealer over to that store and start servicing some of those units in operation, because there's a lot of Toyotas in that area, even if it's a Ford store. Another one is policy expense. So the biggest one with this one that we see is that people assume that this is just discounts or coupons that were provided. Now, it could be, but most time what people need to really understand, dealers need to understand, is the policy expense. It's not going to be reimbursed by anybody. This is coming straight out of your pocket. It's be absorbed by the dealership. So now everyone has different methodologies, and all that's fine, but it does need to be monitored, because it is an area that is very easy for people. I think Corey kind of mentioned it before, where they might be voiding ROs and this and that might be a nice way for them to cover it up on the accounting side, is just plugging all of that to policy expense. So at a bird's eye view, everything looks kosher, but if you actually start digging into it and monitoring it and inspecting it, then you're going to find out, hey, how come they just keep posting all these random amounts to the policy expense? Next is sublet. For some reason, a lot of people think that this is still being done by the dealership itself, maybe because the sublet inventory stays on the balance sheet. But this is service or body work that is done by an outside vendor. You have now outsourced that work. So it is nice to kind of monitor what is your sublet work as a percent of your total work. But just know that, hey, you lost that work basically. You have outsourced it. It's better than just losing the job completely but it's not. If you have a very high sublet amount, something's usually wrong. Or you might want to check because maybe someone in your service department is getting kickbacks from someone down the street. That is another big one. Corey, it looks like you're talking, but I can't hear you. That's why he's working on that. The last one is work in progress, or WIP. I know we've already probably mentioned it a handful of times, but this one, just wanted to make sure, hey, what this is just your outstanding labor that has been flagged on open repair order. So it has been, you have paid the tech for this work. It is still attached to a repair order, which is why it's different than unapplied labor. But the RO is still open at the end of the month. And this does cause a lot of problems, and we'll go over that eventually. Corey, you good? All right, so some common reporting and operational issues that we see. So setup and mapping issues. This is probably the number one issue. A lot of times what happens is people, you just bought the new dealership or you just converted to DMS, you have all your setups done, and maybe you haven't totally checked them, and then, it's off to the races. If your setup is wrong and it is automatically posting to the wrong accounts or going to the wrong area, everything else you are going to be looking at is going to be wrong. So it is by far the first step, and it should be your first check. If you see like, hey, how come our sales tax for X and Y Z state is going to the Florida sales tax payable account, or in Florida we have a tire tax. If that's going to some sort of like payable or something different than a true sales tax account, or it's just not being picked up at all, which is what we have seen, you're going to be out. Now, for tire tax it's only $1.50. That's going to add up relatively fast. Another one is dirty cores. So with dirty cores, what a lot of people don't do is they don't treat it like a normal return. And that's what they should be doing, because otherwise it's just not going to be tracked right. Most DMSs out there maybe don't have a detailed dirty core report. I do know Reynolds has a nice one. But you should be pulling that report and making sure, hey, if I go into my parts department, I see where all of the dirty cores are laid out, hopefully near the pickup area. Otherwise, why else would it be scattered around? And I have that detailed report, and I see that there's only 3 dirty cores there, and I'm looking at my detailed core report, and I see that there's 50 dirty cores, but I only have 5 that have actually been picked up and in transit. Something's wrong. Someone's not doing their job, and now everything that you're looking at is going to be a little skewed. And the other side of that is making sure that you actually apply the credit that you receive from the manufacturer once you get it, and clear that dirty core off of your report. Another one that we do see is that they aren't minusing out the dirty cores afterwards as well. They're trying to say it's sold, which I think some DMSs do allow you to hit sold, some don't. But that's another big issue with the dirty cores. And with that too, you don't want just any of your techs to be like, hey, you know what, I'm just going to take this dirty core home with me. I know I can refurbish it. I'm going to put it into, my buddy's truck, later tonight and move on. And you're missing out on all of that. Because what's the average dirty core credit? Probably between $500 to $1,000 probably. So that adds up relatively quick. The next one, and Corey kind of went over this one already, is the upsell or decline service report. And the quickest thing you can do, and this is one of the first reports that I pull whenever we do any sort of operational reviews, you'll go in, you'll pull, a decline service or upsell report, and everything is either zeros or everything is 100%. That is impossible. So if you are in your dealership and you go and pull that report and that's what you see, people are just not doing their job. Right? They're just not tracking themselves, whether it's because they're scared they're going to get dinged for having a really bad percentage, or they're like, well, I don't want to say why I got my service declined. Oh, Corey, I could hear you there.
I was going to say, I was going to chime in on that. The other piece is like making sure that it's actionable, right? Like, so whenever we have something, making sure that it's a required piece of that process so that we can't deviate from it. That's the other piece, is making sure that whatever tool that you're using, that it is like, I can hold people accountable for using or not using.
Yeah, exactly. And how we went over that chart that Corey had, it's not going to be black and white, right? You're going to need to take a step back. What are your processes? What are their pay plans? How are they going to be acting? And, go and say, all right, this person's doing 50%, but they're landing all the big ones. This person has 70% success rate, but it's all the small ones. Maybe there's some best practices that they can get together and do. They're both doing a pretty good job, definitely better than all the rest that were on there. So don't just take the canned reports and say, oh, no one's doing their job because everyone's at 50% success rate. Then next is the very fun one. So open ROs or open repair orders. So this is a huge issue that I have seen, I think, my entire career, and it goes back and forth. The amount of reports that I have pulled, and I see that there are open ROs that have birthdays, legitimate birthdays, and they might even have had a second birthday. That is theoretically impossible. One of the best tricks I think I've ever seen was, go and print out the open RO report, right? That's gonna have a list of VINs. Go to your service department or body shop, and then walk around, start marking. Is that vehicle still there? Especially those aged ones. And you should have a reason for every single one that is not there. I mean, there are some legitimate reasons why it might not be there, but you should at least know why. And that one will clean up your open RO report very, very fast. Another one is, modify their pay plans. If they're not getting dinged for those old repair orders, and you have an issue with it, you might want to start hitting their pay plan, hit them where it hurts.
Yeah, and the other piece to that is, like, from a compliance standpoint, right? Because if you have an open RO on any vehicle and it's not in your shop, it's out driving around, rest assured that in discovery, the attorneys are going to look for that, right? And say, oh, well, how come you had a repair order that was open on this vehicle? Is that why it was unsafe to drive? And, my client did X, right? So, like, from a compliance standpoint and trying to minimize the liability, you really want to have anything that's not there should be closed out. If it's there, hey, there's a balance on it, like, put it as a receivable, right? Tie it back to that customer, because you can still hold that. But to Adam's point, that work in process, you want that to be minimal. That's probably, I would say 10 to 50 tickets, depending on the size of the shop, right? It's going to be, a percentage based on the number of ROs that you're running through, but you want to keep that to an absolute minimum.
Yep, exactly. And work in process, and going back to kind of the setup and mapping issues, I mean, it could be started there. So one reason why WIP might be getting, or what's causing it to be incorrect, is that the actual cost of the technician labor is being under or overstated in the setup versus, so because when a RO closes, it automatically posts. There is no manual entry side to it. So remember what we said WIP is, it's what you have already paid the tech that is still on an open RO at the end of the month. And then once it is closed, then it should theoretically go right to the cost of sales. But if the actual cost is under overstated, you're now going to start skewing your WIP and your cost of goods sold. So you should really be doing a reconciliation of your WIP at least every month, and it should be part of, like, your controller's closing process or closing the month process. If you ever see a credit balance on the balance sheet for WIP, you should know immediately that something is wrong. It should theoretically be impossible to have a credit balance. There may be some crazy timing exceptions, but even with that, it should be a very, very, very small credit balance. And then on the flip side, if you're only doing, I don't know, let's say 20 million, 30 million of sales or something like that, your WIP amount should not be very high. I was actually just looking at a dealer finance statement right before this call, and this one rooftop does about 150 million total revenue. They have a body shop and a service department. Their WIP was $6,000. So just to kind of put that into perspective, it really shouldn't be that much. And I think they have over 20 techs. So it's a very large operation, and their WIP isn't that high. So if you're a smaller dealer and you see that your WIP is 200,000, and you know that you're not building 3 or 4 cars from the ground up, something's probably wrong. All right. Then, so parts pad to GL reconciliation, or you can kind of consider this your parts to accounting reconciliation, and just some minimum items to consider. I mean, there are some people out there who actually can get this difference down to 0 and have every single thing picked up, but you don't necessarily need to have it 0 out. There are some natural differences that are going to happen. Right, usually a day or two delay between your in transits, or maybe you have certain allowances on bulk oil and stuff like that. So you'll have some differences there, but the main ones to consider, are your in transits and purchases. You want to make, if you are recording appreciation, depreciation, then it wouldn't actually be a reconciling item. But if you're not recording that on the accounting side every day, or at least monthly, that would end up being a reconciling item. Your dirty course, and also your in transit returns. Those are the main ones. Between all that, you should be able to get very close. If you are still way off, then something is off, something is wrong, and that could be a multitude of issues. You are going to want to go ahead and check your setups. Maybe if you have an allowance for bulk oil, maybe it's pulling too much or pulling too little. If you have a standard entry set up on the accounting side for it, maybe that's pulling too much or too little. There's way too many to consider, but you just have to kind of take a step back. What are your processes, and go from there. But this reconciliation, it shocks me that it is almost never done sometimes by dealers. It really should be done every month as part of the closing process. But for some reason, a lot of people don't do it.
And this is another one of those areas too. I know when we were talking a little bit, even down to like perpetual inventory or cycle counts, right? So taking time to say, throughout the year, I want to just like sporadically spot check, and you even suggested like maybe having somebody from accounting that's familiar with like doing counts and stuff like that to spend some time, going through bin counts.
Yeah, no, exactly. I mean, or it doesn't even necessarily have to be accounting. To someone who's not in the parts department or doesn't really associate with the parts department, have them go in there and do it. I mean, I'm sure I think every single parts department I have walked into, the parts manager has said, no, I do bin checks every day. But how accurate is that really going to be? Or, I mean, he or she might just be too familiar with everything that's going on at the parts department. You want someone to come in with fresh eyes and do that count right behind them, or maybe a day later, and see what the results are. Usually you find that there is a pretty large difference between the two. And it's just a good internal control segregation of duties to have in your business. The next fun one is special order parts. So this is another one that can get out of hand very, very quickly. Most people will be like, oh, we'll already have a process in place for that. We definitely get a customer deposit for any sort of special order parts. You might say you have that policy. Odds are it is not being implemented. Actually, just to jump forward a second to kind of show a quick mapping. Here's a generic mapping one of technically a live client, and you can see at the very bottom, they might have a policy for special order parts deposits, but it's actually in the mapping left blank. So it is not being automatically recorded. That means someone has to manually go in there and make sure it's being done every time. And if that is the case, it's not happening every time. I can guarantee that. Super simple test that you can do. Just go into accounting, pull your customer deposit schedule, and then go to the special order parts listing and see if the customer names are actually on there. Right? It's a very simple, very straightforward, easy thing to do, and you can actually see if that policy is in place. Now, if you don't have that policy, you should definitely implement that policy, because what's holding the customer coming back and to actually get it? You've already spent the money on that part, and unless you can somehow get them to come back and not find it cheaper somewhere else, or just, hey, I didn't actually really need it, they're just not going to come back. Back again. And then another one, and this is more on the setup and mapping issues, are your write-up and other general forms. In our audit practice, we have quite a few clients that have their own internal audit staff. I understand not a lot of people can have that, but it is nice to kind of see. And then what we do when we're doing compliance or operational reviews, we'll notice that a lot of these forms, I mean, the error rate on these forms is very, very high. I mean, you're looking at almost anywhere from like 15 to 20% on average that it's missing something. Some of the main ones that we do see on, a write-up form, and this, goes, I mean, everyone cares about their CSI too, but the amount of times that the advisor or whoever is in charge isn't just checking the box on what is the customer's preferred method for getting the estimate. That should be number one, but on average, about like 15 to 20% error rate is just not being checked. That's,
and Adam, that's
crazy.
one of the things like we were talking about too, like where technology really does come into the process, right? So like as an example, we've got Service Touch, which has been out in market for a while, that allows us to be able to kind of capture all the pieces, the reception process at the vehicle. But we're also rolling out, we announced at NADA, a product called Service Flex Advisor that takes all that stuff and puts it, right here in my pocket, so I can go out to the car, greet the customer, go through the services that are, that are there, get my walk around pictures to make sure that we got, all of our documentation. If there's anything that we identify on the car, we're doing the walk around on the lane, and then finally, like, how are we going to follow up with you? What's the best way to contact you? So that way, like, if I have to call you in an hour, I at least know how to get in touch with you, or how to text you, or email, or, I don't think anybody still uses fax machines, but, all the different ways of communication that we have, how are we going to follow up with you whenever there's a question, or, whenever your vehicle's ready to go? And so the more we can make that technology process marry up to what the expectation is on the drive, I think that's going to continue to be, a really key area.
Yep, 100%. I mean, and even as simple as, the MPIs that are missing your recall checks or multi-point inspections, right? That should be done on every single car that's being serviced. And if they're not running a recall check, or at least, kind of going back to what I said before about, your UIOs and maybe trying to pull some other makes into your service department, your techs, they're probably not up on every single recall that is on a, let's call it their non-make. So if you're not doing those non-make recalls on those multi-point inspections, you might be missing out on a ton of money, right? And if I'm not mistaken, on those, I think you'll be able to charge customer pay for those and not have to charge your warranty rate for them either, because you're not technically with that manufacturer. But so there's just a lot of those key things, and with the technology too, no matter how good your technology is, the technology cannot check the box, those boxes for you. That is what your team has to do. And the only way to make sure that they're doing it consistently and correctly is hit them where it hurts. If they are doing it, within a reasonable error rate, then, they won't get dinged. But if they're outside the error rate, you should really ding them on that. So that way you are getting accurate reporting so that you can run your business the most efficiently. You're not missing out on anything. And then lastly, just some, what are some of the potential issues with current and future technology? There was one that I wanted to mention that I heard about last week was, they have this really cool AI, like follow-up, I guess, BDC. And it was sending out automatic follow-ups for service, yet, so the customer, yes, did have an ICE vehicle at one point, but the customer recently bought a EV vehicle. The AI sent out a follow-up for them to come in for their LOF or lube oil filter appointment, which doesn't make any sense at all.
Yeah, the application of AI just across the board without having like good guardrails and some good models behind it, really can end up in some really, I'll call it, hairy situations, right? Because like now you're telling a customer something that their car doesn't even have or need. But being able to get the right data to the right customer with the right message at the right time, definitely is one of the really cool things that, I know we're doing some things around engagement AI for service, for doing outbound components, and, incorporating inbound for appointment AI, and being able to leverage some of those. Because I mean, the fact is, in most cases, you're trying to handle more customers, right? There's definitely growth, and we've seen it in service, and particularly, where the average age of the fleet is close to 13 years. We've got more people that are wanting to come through, and we're trying to leverage a positive consumer experience so they want to come back. But then we're also trying to do all that with less people oftentimes. So the more that we can, use efficiency and technology and different tools that are at our disposal, really helps make sure that the customer ends up with a positive experience, but it's also something that works for the dealer as well.
Yeah, exactly. All right. Now, we kind of already did touch on a lot of these setup and mapping issues, but just really quickly wanted to touch on a few and also kind of show you what what a traditional mapping would look like. So shop and supplies credits, and this is a state-by-state issue. So, let's say you're in Pennsylvania. You are not really allowed to do any sort of shop supplies and credit on your ROs. But now let's say you go to a state like Florida or Virginia and you just bought a new store there. And you're like, well, hey, just copy over our templates from our other stores. Well, you're now in a state, though, that does allow that kind of stuff. And yet that's some huge profit that you might be missing out on. We actually had a client where they bought their first store in Virginia. They've never had to deal with that before. And, probably took us like 6 months to realize, hey, how come, you're actually running a shop supplies like a overall expense on your dealer financial statement? Usually the stores that are in this state, they're running an overall credit balance. You're actually making money on your shop supplies. And they're like, well, how would I be doing that? And then they had no idea. And, who knows how much money they actually missed out on for the 6 months just not having that. So that's, once again, to say, while you thought, hey, everything was working and it was working for your Pennsylvania stores, it's not working for your Virginia or Florida stores. And that's just one example. And it's the same thing with the sales tax in other states, right? If you're on the border of some state, you really should be tracking your sales tax in separate accounts on the accounting side. So you should have a, sales tax Pennsylvania, sales tax Ohio, or even if you're in the Northeast where they start taxing differently by locality, then it really should be that. Now that's more on the variable side. For your service and fixed ops, the sales tax is based off where you are specifically, but it's still just a setup and mapping issue in the DMS regardless. All right. So then going into some of the key metrics and ratios, obviously I think everyone knows about absorption rate. It is probably one of the number one talked about metrics out there. I would say that what we see on average, a good benchmark to shoot for is probably 80% fixed absorption, but our most profitable dealers are over 100% absorption. So that is obtainable, and it's very consistent, right? I mean, I think Corey mentioned it a couple times during his part of the presentation where, that profit from fixed ops runs the business. That is your bread and butter. It keeps the lights on. So the higher your absorption rate, the better you are, and it's not a coincidence that our highest performing dealers have very, very high absorption rates. And hours per RO, another big hot topic, and the reason I want to talk about this one, well, one, the reason why you want to look at it, the product is time, so that's why it needs to be tracked like that. But a misconception with hours per RO is, if I have an insanely high hours per RO, I must be doing fantastic. But you do, especially in this data age that we live in, you do want to kind of break it down by op code, right? So if I'm having a steady trend increase in my LOF hours per RO, that's not a good thing. It shouldn't be increasing, right? If you're saying, okay, we budget, 0.5 or an hour for every, LOF or one line ROs, but, it's now jumping up to 1.5. There is an issue there. And I know a lot of times what people will see is that, we just must not have enough techs. So we have to hire more techs, or LOF techs specifically. But that is a huge mistake. Usually, at first, at least look at and see if there's a dispatching issue, a workflow issue, something else first before you just go and hire four more techs, because now you're just adding way more cost that you did not need to do. Then, we kind of already talked about the tech productivity and efficiency. This is a good one to review and definitely have, weekly or monthly meetings with your team, going over them, seeing what's happening. And that's where trending really becomes important, because maybe there is someone where they might be at a lower efficiency, but their last 3 months they've only been trending upwards. Yeah, you might have someone with a slightly higher efficiency, but they're only trending downwards. You're going to want to pick up on that. and not just look at the one number, static number every single time. And another one to look out for this one too. I know Corey and I kind of joked about this one earlier, or when we were talking on the side, was you'll kind of go in there and you should be looking at it by tech or by advisor, because a lot of times you might see, and hopefully no one has this exact problem, but if you have a master tech who's spending 60 to 70% of their time doing LOFs, that is an issue. Or even like a mid-level tech, they shouldn't be spending that much time on those, because what they're probably doing is, that's usually probably going back to a pay plan issue. They're like, hey, I can knock this out in 15 minutes and I flag an hour. I'm just going to keep doing this and getting paid a ton, right? Instead of trying to take on those more complicated jobs or higher grossing jobs for you.
And that's another one of those areas where like very small incremental changes, right? Like we were talking through, hours per hour and technician efficiency, right? So technicians are going to run 120 to 150% efficiency. But like if I could pick up, 2/10 on every repair order, right? Well, what does 2/10 equate out to? If I'm at 1,000 hours a month at $150 an hour, that's 30 grand. Like it's little, like very minor things that, as long as you have kind of the understanding of what's happening within them, both hours per hour and effective labor rate, both very closely tied together to make sure that you're profitable. But then, how do we put the things in play to help make sure that, we're gathering all those 2/10 on every repair order, that we're able to get more time through the shop.
Yep, exactly. And then just for timing purposes, I'm going to lump in these, the three that are a percent of gross. So unapplied labor, parts wholesale, and policy expenses, percent of your gross profit. I mean, those should be looked at and trended. You want to see if you have a spike in that. All of those are good red flags to say, hey, there must be an issue somewhere. And, that those are the main three, in my opinion, for, hey, if there is any sort of inefficiency or operational gap in your service department or parts department. Then same, honestly, labor utilization goes right along with both the tech productivity, efficiency as well. Then your parts aging. This is another really good, every DMS out there has what we would call like a parts management report or parts summary. You should definitely look at that. They are very complicated to read. The first time I got introduced into one, I was like, I have no idea what I'm looking at. It looks like someone threw up on a piece of paper. So look at that report. Go and look at your aging. Go look at your non-stock parts. Go and look at your obsolescent parts. It has everything on there. Ask, hey, what does this line item mean? Go ask your parts manager. What is this on this management report, and see what they say. It gets the conversation going, and it's also just a really good thing to be looking at. And then what goes with that is your parts day supply and your parts turnover. We have a lot of clients who actually are really focusing on parts turnover right now, and specifically with that, because you could back into it, what is your excess inventory? Do I have too much inventory? Because everyone's like, oh, well, I have supply chain issues, and all this has happened last couple of years. You still could have excess inventory even with those shortages. I know it kind of sounds funny, but it's true, because if you just have the wrong inventory, you're most likely going to have excess inventory. I would say the best performers are probably turning, parts turnovers around 8. And then all you have to do is say, all right, if I want to achieve a parts inventory turnover of 8, what is my average inventory or average cost of goods sold? What was my inventory at the end of the period I'm looking at? And then seeing what that variance is between what I actually have on hand versus what it would have taken me to get to an 8 turn. Very simple process and calculation, and it could very easily give you a lot more profit on your bottom line. And I think that about wraps it up. A little bit over, so I apologize, Kathy.
You did pretty well.
No
actually.
worries. A lot of very valuable information. We have a couple minutes for some questions if anyone has any pressing questions for our speakers. Or Alicia, I know you always have a question.
I have a question, and it's more of a general question because, if I get down into the weeds, I don't know what I'm talking about. But I know that both of y'all touched on the age of car on the road, right? The car park, the average age now is like 12.7, 12.8 years. That's an old car. But what we also know is that dealer service departments are losing business to independents. And, you know, if you have a 12-year-old car, are you going to want to take it if it's to a service department? So is there a way to use the DMS, the information in the DMS, to retain customers? To, I don't know. That's why I'm asking you. Is there a way to use this information to try to encourage those customers in the really old cars to keep coming back to your dealership?
Yeah, so there's a number of different ways that you can go through. I know from Reynolds' perspective, we have a CRM called Focus. So it encompasses all of the data around both sales and service capabilities. And so we can do an outbound campaign based on, you know, how long it's been since we saw the customer. So if you know, we consider them kind of a lost soul, they haven't been to the dealer in, you know, 13 plus months. We can absolutely trigger, you know, communications that go out to that customer, whether it's by email or text or, you know, whatever that engagement is, but to, you know, to work to get them back in. And so one of the pieces is really being able to segment again that clean data so that we know, you know, we're reaching out with the right message at the right time.
Cool. We have a question, do we not, Kathy?
We do. We have a question that says, hello, we are thinking about changing DMS systems. Who would you recommend for the best overall, not using price as a factor?
Rigged question, given we have Reynolds.
I was going to say I'm biased, but I can certainly answer that.
Sure. I mean, do you want to start, Corey?
I was going to say I would certainly say Reynolds. Like we are, you know, from an organizational perspective, you know, our product teams are working to build the coolest stuff that's out there. You know, we are and always have been an incredibly innovative company. So, you know, from things like our Service Flex Advisor, Service Flex Technician, you know, Parts Flex Logistics, so being able to do wholesale deliveries and, you know, some of those areas and some of the other technologies that we have, you know, all the way down to being able to record videos and images of the vehicle as part of the multi-point inspection and stitch those into the multi-point. You know, we've got a tremendous amount of both control and capability, as well as a phenomenal team of professionals that are able to provide technical assistance, ongoing support, and kind of coaching and guidance, as well as phenomenal teams on the product side of things who are really vested in what we can do to help make your life better every day, right? Like our goal as a company is that, you know, once you're using our solutions, you can't imagine doing things any other way. And so we're incredibly committed to the success of our dealerships.
Adam, anything to add?
Oh, that's a fun one. I think, I mean, obviously we're on with our friends at R&R, but I you know, trying to be as unbiased as possible. You know, everyone has their pros and cons. There's no doubt about it, right? I mean, even with us internally, right? You know, with our competitors, there's pros and cons to us as well. You just have to figure out what is, you know, what you care about most with your DMS system and go from there.
And I saw the question on SPG. Yeah, so I will tell you, our service price guide is unparalleled in the industry. So we've got a team of professionals that go through and look up parts and labor information, just like you would in the store. We compile that into our database, marry that up with whatever your settings and specs are, so like basically what your rules are, to be able to put for 80 to 90% of what's going to roll through your shop every day, a to the penny estimate that includes parts, any materials, shop supplies, taxes, like whatever those fees are. And we're continuing to build upon that. So at NADA, we announced integration with Dealer Tire. So for Dealer Tire programs, we're able to incorporate their digital retail sales guide into that process and then roll those in so that they follow the same output, if you will, the same path. All the way over to parts. So again, looking for any place that we can to help drive efficiencies into the process, as well as consistency for pricing and process, so that we don't have all this disparate stuff happening all over the place.
Thank you. Did we have a last question, or should we wrap it up? 2:04. So no more questions, Alicia, from you?
I always have questions, but no, I think we're good for now. Yeah, okay, I do kind of have a question. So you see a lot of newer DMSs out there, and their big thing is we're in the cloud. And I actually remember asking R&R about this, Ray about this at NADA, but I mean, are you in the cloud? Do you have your own cloud? Like, why would we hear all this about being in the cloud? Is that superior?
That's relatively new, I think, too, right?
Yeah. So actually, the vast majority of our customers do exist in the cloud. So the cloud is really just somebody else's PC, well, not PC, but it's somebody else's computer. But we actually have a world-class data center that is located at our facility in Dayton, Ohio. It is mirrored in Houston, so we have redundancy that makes sure that everything stands online, as well as like all the backup generators and network capabilities and all those things. So I think it's like close to 80% of our customers are cloud hosted to our data center, which is also, SOC 2 compliant and has all the compliance around security. And the one in Dayton is right down from our security operations center. So having Proton is one of the brands that exists within the Reynolds infrastructure, also allows us, that cybersecurity and intelligence around making sure that that data stays secure, that it's accessible, the uptime for all those servers and the transactions that are happening, whether it's through OEMs or third parties. I mean, we handle millions and millions of transactions, every single month around all of that data moving, and it's all done securely and based on whatever the template is that we're working with from the provider or the OEM. So, but yeah, so the cloud is continuing to be one of those things, right? Not having to have somebody maintaining servers, but there are still some customers that want to have an on-premise. And so the beautiful part is we're able to answer the call regardless of what the preference is at the store.
It's not really a benefit to the dealers with this one, but from just our standpoint, and because we have access to a lot of our clients' DMSs, so we can get in there and pull the data that we need for all the compliance stuff or consulting engagements that we're working on. And one of the issues I always had with Reynolds was I always had to have like different laptops that are connected, because it was like each seat was like taken up by a certain laptop. And now that it's all on the cloud, I think a lot of them all switched over, I think at the end of last year. And now I have no issue. It's all on one laptop. I can access like all, 5 or 6 that I have access to just in one spot. And I no longer have to connect to the VPN either, which is also very nice, because it seemed like a lot of clients for some reason always switched to VPN users. So I was always having to constantly get a new VPN as well. And that usually caused issues with the seat and all that. So no, it's not really beneficial for dealers, but for someone like us, it was very beneficial.
All right, awesome. Well, thank you guys. Go to the final slide here. Thank you, Corey and Adam, for sharing all of your valuable insight today. And thank you for everyone who joined us. If you're still here past the hour mark, I appreciate you. And we hope this discussion gave you a new perspective. And if you'd like to continue the conversation or learn how our team can support your dealership, we're happy to connect. As mentioned, we're going to be publishing the recording and the slide deck, so keep an eye out for that email. It'll probably be like on Friday. And thank you again for spending your time with us. We look forward to seeing you at our next webinar. Thank you.
Thank you.
Bye, everyone.
Thank you.